Welcome back to Bazaar Morning Call. Well, this morning we have, a lot of stocks in focus. Our research team is standing by to give you that list. So let me kickstart with Maruti that will be in focus this morning on the back of, presentation that they put out to make investors understand what their deal with SMG is. Now, Maruti has ended that contract manufacturing agreement with Suzuki, with SMG, Suzuki Motor Gujarat, and they shared an entire plan on what this means for shareholders. So just wanted to put some of that on board. They shared what their capex plans would look like over the next few years. They have a requirement of 4 million units production capacity by the end of 2031. This requires an additional capacity of 2 million in the next 7 to 8 years itself. And out of that, there is a 3 million unit target that they have to sell in the domestic market. They said they reiterated all their targets that they'd given out earlier, saying that the company will increase the number of models from 17 to about 27 to 28 models by FY31. Out of that, 6 models will be electric vehicles. They will kickstart electric vehicle production in FY25, and that will be from the Gujarat plant. By FY31, Maruti has a plan to get 15 to 20% of their overall revenue contribution from electric vehicles itself. So they put that entire plan in a presentation. Nomura put out a note where they said that this transaction may have some impact on the ROE of the company. The fact that they've ended this contract manufacturing agreement with SMG, but this is something that the street has already factored in when the announcement came earlier on. So they expect some negative impact on ROE. It will not have any impact on the EBIT of the business because SMG is a zero EBIT company. And they have already factored in a cash outgo of 423 rupees a share or a dilution of 4% has already been factored into the stock. So they maintain their neutral rating and a target price of 10,422. I'm going with green because, this news is known. It's just that additional details have been put out now. So going with green on the stock.
All right, green on that one. Then let's hop across to Ekta. She's joining us to tell us about a couple of pharma names that she's tracking. Morning, Ekta.
Morning. Well, definitely disappointing news which is coming for Dr. Reddy's as well as the likes of Natco, Cipla, Sun, Zydus. I expect all of these stocks to probably see some red today. That is because Dr. Reddy's in an exchange notification last evening has said that they have been named as a defendant in a complaint filed in a US court by Mayo Clinic as well as LifePoint Corporate Services along with several other pharma companies. This is with regards to Revlimid generic, the cancer drug which is worth around $6 billion in terms of market size. The claims by the defendants is that there was improperly retained competition as well as shared monopoly in the sale of the brand and generic Revlimid through respective settlements. So basically there was unfair competition which took place for such an important drug which is used to treat multiple cancers in the US. So that's the key contention point. Remember, Revlimid generic is an $8 billion drug. Now, Elara says that typically these litigations drag on for years and we've seen them happen in many drugs over the past couple of years. Elara says that this is before it gets settled for amounts that are generally 20 to 40% of profits. Dr. Reddy's has about 50% of its profits coming from Revlimid generic. Sun, Cipla, Zydus Life have around 15 to 25% of their profits from Revlimid generic. So what we could probably see is all of these stocks in the red because there is uncertainty in terms of what the settlement amount could be. And also remember that there is litigation costs which they have to incur as well.
Okay, well, Ekta, thank you very much for that. So that's Pharma in focus. Phoenix Mills is the next one, which we're going to focus on. Sonal is here with details. Sonal, good morning.
Good morning, Prashant. Well, the company will be in focus on the back of their Q2 update, which looked good across their segments. Let me start with the mall segment first, where the retail consumption was up 20% to come in at 2,637 crore rupees, and which converted into good collections as well, which grew 20% to come in at 638 crore rupees. In their residential segment, which is not that big, they have been able to do their sales and they've grown it very well as well. They talk about higher demand coming in. Their sales are up almost 200% in the residential segment at 292 crore rupees. Their hotels business, where the occupancies did see an increase in the first half itself, their average room rentals in their Mumbai hotel was up 32% at 15,767 rupees per room, and their Agra hotel, which is Courtyard by Marriott, their average room rentals went up by 13%, and this was supported by a rise in the occupancies as well. So going with green for Phoenix Mills today.
Okay, going with green out there. Thanks, Sonal, for that. Hop across to Manglam. Manglam, you're going with red for Concor?
That's correct, because it's more of the same for Container Corp. There has been weakness in their EXIM business, which is bulk of their volumes, and at the same time, their domestic business continues to grow, and that the company has been focusing on in terms of growth area as well. So in terms of their second quarter physical volumes update, the EXIM volumes have grown by about 3.5%, which is lower than the first quarter as well, whereas the domestic volumes have grown by 26%. But this again accounts for just 20-25% of their overall volumes, as a result of which their total volumes have grown at 7.6%. What have the first half volumes totally grown at? Close around 7.76%, and this compares with their annual guidance of 10 to 12%. So this means that now the onus is on the second half for the company's volumes to grow and achieve the guidance that they had given at the start of this year. Importantly, with the Israel-Palestine war, etc., will be important to see whether there will be further pressure on EXIM volumes as well.
All right, thanks a lot for that. So that's on Concor. Well, Surbhi is also joining in. She has a couple of more stocks that are in the news this morning. Surbhi, what are you looking at?
So I have 3 stocks on my radar. The first one is GR Infra. Now the Dibang Power Consortium, that is a JV between GR Infra and Patel Engineering, they have executed an agreement worth 3,637 crores with NHPC. Genus Power, they have won 2 orders worth 3,115 crores, and this is to install and commission 35 lakh smart prepaid meters. And lastly, Mazgaon Dock, they have signed a letter of intent with a European client. This is for construction of 6 firm and 4 optional multi-purpose hybrid power vessels.
Okay, thanks for that, Surbhi, and thanks to our entire team. Well, let's do a quick recap then of all the stocks that we just covered. Stocks with positive news flow. They include Maruti Suzuki, Phoenix Mills, GR Infra, Genus Power, as well as Mazgaon Dock. While we have 5 stocks that could be reacting to negative news flow: Concor, Dr. Reddy's, Cipla, Sun Pharma, and Natco Pharma.
All right, let's take a short break on that note. On the other side of the break, Hemang Jani will be joining in for some fundamental stock analysis. Later, we'll connect with Azlin Ahmed of Argus Media to talk about the impact of the Israel-Palestine war on crude prices. Stay tuned.